Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're back on YouTube and it's time to look at Bitcoin again. So we're going to be doing something a little bit different today. We will come over and have a look at the Elliott Wave counts from a smaller time frame. But before we do that, we're going to do some other analysis first. And I'm going to start by sticking my neck out. I'm known for doing this, and I think the market's going to go higher. I don't think the bull market's dead, and I think we're off to new all-time highs later this year. I don't know if we've bottomed at the moment. We may have done. We can count it as though we have. We could count it as though to go lower as well, but we may have bottomed. But either way, I'm still bullish. The bull market's still alive, and I think Bitcoin's going higher. I'm just going to say it. Now, you don't get burnt at the stake for being wrong, as much as some people might want to try to do that to you, and you don't win a gold medal for being right either. So I'm just saying what I think. But now it's time to back it up, right? And that's what I want to do now. Alright, so three things I want to look at today before we come into the Elliott Wave stuff. We're going to look at the M2 money supply and how it relates to Bitcoin. We're going to look at global liquidity, and we're going to look at fear and greed as well. In other words, we're going to be stepping outside of our usual Elliott Wave analysis and doing a few other things instead. Now, I wouldn't normally do this, but I honestly do feel there's a lot of value here. So I want to start by just framing the whole idea. If you've been in the markets for a few years like I have, you know that available liquidity, monetary debasement, the business cycle, or the debt cycle, all of these things feed into the market being extremely cyclical in nature. And it is extremely cyclical in nature, right? We have higher highs and higher lows, and that's what it does. And it just goes up and up and up and up. Now, there will always be voices out there which call for the end of days. There will always be voices out there which say this time it's different. But the simple fact of the matter is, look at a chart of the S&P 500. Watch it make higher highs and higher lows over the history of the chart. Look at a chart of gold over the long term. Watch it make higher highs and higher lows. And for a shorter term history asset like Bitcoin, look at it make higher highs and higher lows. You know, it's this cyclicality is what breeds and has bred over the decades and the centuries now. The very simple philosophy of buy low, sell high, buy the dip, and it works. You've only got to look at charts of these asset classes to realise that it does work. Now, this isn't an invitation to go and buy stuff in a downward trend which is collapsing and has never seen a higher high and is absolute dog shit garbage which you shouldn't touch with a 10-foot barge pole, right? That's not the same. We're talking about long-term trending markets going higher, right? Which we can see clearly when we zoom out and look on a longer-term chart. And these cyclical markets, and they're all cyclical, right, are fed by these factors. So the first thing we're going to start with is the money supply. So we're going to come on to our indicators here, and we're going to load up a really cool little indicator. Now, I'm not sure if I should name drop, so I'm not going to. This is from one of our members who loaded up a really interesting script to put into the Pine editor. So he posted it on the Discord. I've borrowed it, and I've loaded it up onto the chart here, and I think it's a really handy little indicator. So thank you very much for your contribution. You know who you are. So what we see here is the global M2 money supply. So if we just zoom out a little bit, so we can see the candlestick chart of Bitcoin on the weekly time frame here, and we can see the global M2 money supply. Okay, it's a pretty clear correlation, right? M2 go up, money supply go up, Bitcoin go up. Now, no surprise if you apply this over the stock market, similar result. No surprise if you apply this over gold, similar result, right? So here's the M2 and here's Bitcoin. Now let's zoom in and focus on the shorter term cycle since the lows of 2022. That's what I want to look at next. Alright, let's just get the chart settled down. Now what I'm going to show you next is I'm just going to show you the lag which occurs between the M2 money supply peaking and then the following peak which occurs in Bitcoin. This is what I'm calling the M2 lag. So we have a 77-day period here between the peak in the M2 and the actual peak in price in Bitcoin. We have a 70-day peak here between the peak in M2 and the peak in Bitcoin, and then we have a 77-day here between the peak in M2 and the peak in Bitcoin price. So as you can see, monetary supply peaks, and then roughly 70 or so days later, Bitcoin peaks. And because of that lag, we get a divergence occurring. So if we just clear that off for a moment, and I can show you, you can see it quite clearly on the chart here. Here's an example. Here's M2 shooting up, okay, and here's the supply. Here's Bitcoin remaining flat. Bitcoin then moves up to follow, okay, and then we can see here currently M2 money supply is going up, okay, and Bitcoin is going down. So this is what we would call bullish divergence, right? M2 leads the way. Remember, there's a lag of about 70 odd days. Okay, so what we're going to do now is we're going to come down to the daily time frame, and we're going to take the information we have of the lag, the 70 odd day lag, right, that we can see between M2 money supply and Bitcoin, and we're going to adjust the position of the graph to accommodate that lag. And we can do that with this cool little indicator by changing the day's offset. So we can offset it by a certain number of days on the chart. So what we're going to do is we're going to take 70 and we're going to use that as our offset, since that appears to be the lag. And now you can see how we have now accommodated that lag. For example, look how nicely we've lined up this move here, we've lined up this move here, we've lined up this move here, right? We've lined up these peaks here. So we've accommodated for the lag and we've lined the chart up with itself. Okay, what can you see now, guys? Right, here's where Bitcoin is at the moment. Here's where M2 money supply is, adjusting for that 70-day lag. Okay, now we know that M2 leads Bitcoin, and we're now adjusted for that. So we can see if we're going to follow, and it's an if because things can change, they're not always correct, but if the same process continues, we get an idea of what the next move in Bitcoin is going to be, because we can see what the next move in money supply was. And therefore we have a pretty good projection that if we aren't at lows yet, we're close to forming them. You know, we've spoken about this major support level. There's no guarantee we'll come back to it, but we may have one more move down into here, okay, and then we'll be off. Or we may have already bottomed. Either way, M2 suggests that the next move is higher. So that's the first thing I wanted to talk about, the M2 money supply, and I wanted to show you that little application of that on the chart. Right, so the next thing I want to talk about is I want to talk about the situation with global liquidity. So I'm going to bring up a indicator here on the bottom, and whoever created this on TradingView, you have my thanks. I'm using it, and all credit goes to that person who did this. It doesn't tell me here, unfortunately, but either way, here is a little indicator which shows us the peaks and troughs of global net liquidity. Now, it is in a downward trend and has been throughout this cycle, which is testament to just how much institutional adoption there has been of Bitcoin, because traditionally global liquidity feeds into Bitcoin, and the Bitcoin is very sensitive to whether we're going up or down. This cycle, Bitcoin and multiple other assets have rallied, including the stock market, including gold, while overall global net liquidity has been trending downwards. However, it's the peaks and the troughs which really matter when we line them up on the S&P, when we line them up on gold, and when we line them up here on Bitcoin. So that's what we're going to do now. We're going to take our global liquidity lag. So all we've got here is the peak of the global liquidity and then the peak in Bitcoin. the peak in global liquidity, and then the peak in Bitcoin, the peak in global liquidity, then the peak in Bitcoin, and what is now potentially coming back to trend, another peak in global liquidity. Now, there is a possibility that this downward trend in global net liquidity has ended. Now, if that's the case, it's moon for every risk on asset, regardless, because if we can go up like this for the last 18 months with net global liquidity shrinking, imagine what we can do if it starts increasing. Now, I'm not going to speculate too heavily. We've just had the FOMC yesterday, 2 days ago if you're watching this on YouTube, as my patrons get early access. But either way, Mr. Powell knew that he had to give the market something. He wasn't going to give them a rate cut, but he knew he had to give them something. Right? We had a 10% sell-off in the stock market, so what did he give us? He gave us the end of the Fed's balance sheet runoff, starting April 1st, April Fool's Day, and it's going from 25 billion a month to 5 billion a month, which is basically switching it off. So that element of quantitative tightening, the Fed reducing its balance sheet, that's coming to an end. Now, I did mention in previous videos that I saw the Fed balance sheet runoff finishing somewhere around July, middle of the year, July, August. Apparently, it's a lot sooner. So whoop-de-doo, that's good news. So we could see overall liquidity actually improve if we get continued rate cuts into the future, as well as potential QE. Then it's party time across all risk assets. Okay, but anyway, getting back on track. Here's the difference, the lag between the peak in global liquidity, net global liquidity, and the subsequent peak in Bitcoin. We have an 87-day period here, a 73-day period here, an 89-day period here, and I'm projecting maybe a 90-day period out until the next high. Could be longer, could be shorter, it could be 60, 70, 80, 90, whatever, but let's go for the more longer term and say it's 90 days to the next peak. Right, we can see the lag of Bitcoin, we can see the same idea of projecting the future out using these peaks. Now, you could line up the troughs as well if you wanted to. It's also pretty accurate, but we're interested in when the next high is coming, right? We think we're currently at a low. Okay, so if we marry up the M2 money supply now, we don't always meet, but we can see with the adjusted peak in Bitcoin how very accurate it is, and we can see that with roughly a 70-day forward projection of the M2 money supply, and between a 70 and 90-day forward projection of the global net liquidity lag, if we put the two lags together, we can see that both are pointing to Bitcoin making new highs. Both are pointing to Bitcoin rallying to new highs. Okay, so that's that covered, and we're just going to take that off of the chart. The next thing I want to discuss is fear and greed. Right, so the next thing we're going to talk about is Fear and Greed Index. Once again, whoever created this indicator, my thanks goes out to you. And we are now going to look at the lows during the Fear and Greed Index, Crypto Fear and Greed Index. So anyone who's been in the market again for a while will be aware of how much of an important role sentiment plays in making well-timed decisions. So we want to make sure we're listening to the right voices, because it's every single trader and every single investor can fall victim to obviously their own personal bias, but also to the arrogance of thinking that they're somehow separate from a crowd and they're unique and they know something nobody else does. If you're going to make a claim, a contrarian claim against the greater trend, you need to provide evidence. And you need to provide evidence as to why you think you're right. You can't just say, everyone's wrong, I'm right, trust me, bro. Which is basically YouTube in a nutshell a lot of the time, isn't it? But the reason I'm saying that is because you want to make sure you're listening to the right voices at the right time. So when the market's selling off and approaching oversold conditions on the RSI, extremely bearish MACD, for example, and extreme fear conditions, whether it's the CNN Fear and Greed Index for the stock market, or whether it's a Crypto Fear and Greed Index, and we're in those oversold conditions, we want to be listening to the bears, right? Because the bears will tell us that it's the low. Because bears, in their excitement, get more bearish at market lows rather than bullish. You know, the sky's falling, it's the end of the world, it's the next global financial crisis, and everything's going to zero, and they just get extremely predictably bearish when everybody else is scared, because they're scared, and they think they know better than everybody else. Alright? So when we approach lows, we want to be listening out for those voices, and if those particular voices are doubling down on their bearishness, it's likely the market low. We are very close to a low, if not about to form one. There will be occasions when this isn't the case, but you go and look throughout the long-term trends of the assets I've mentioned today, Bitcoin, gold, S&P, and you go and line up the extreme fear readings, and the extreme, like I've covered with the PCC, as well for the SPY, like I've covered with the VIX, like I've covered with oversold conditions in RSI. If you take all of these confluent factors and marry them up with market sentiment, you will find 90+% of the market lows. Okay? Now the same is absolutely true on the opposite end, but way harder to call, because the advantage of coming down is you're coming back into something that's happened. You're coming back into support. You're coming back into trend. You're coming back into Fibonacci. Going up, you're going up into blue sky. So calling lows is tricky, not impossible. Calling highs is retarded. Okay? So it's not because it can't be done, but because there's no possible precision to it. There's no possible way of getting it absolutely right, because it's not about when per se, it's about how high a price goes, right? We've all seen charts which go exponential. You might get the week right, you might get the month right, you might get the year right, but the chances of you knowing where it's going in price are nowhere near as likely as you getting where it's going in price when it's coming down. You are far more likely to predict the low or to get near the lows in an upward trend when measuring a pullback than you ever are to predict the high. If you don't believe me, go back and ask anyone like myself where they thought Bitcoin was going back in 2015, 2017, 2020. No one would have believed the highs that we ended up at. No one. Okay? Maybe someone somewhere, but they would have been called insane. But either way, my point being is, when we go into the highs, right, and our size overbought and we're at extreme greed, okay, that's when we want to be listening to the bulls. The perma bulls, the dedicated moon boys, right? If they are doubling down on their beliefs, it's off to the moon, it's $1 million, blah, 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 blah. That's when we need to be fearful. I know it's an old saying that the old man coined, and he was absolutely right to coin it. Be greedy when others are fearful, be fearful when others are greedy. But it's amazing how few people actually are willing to do it. Okay? And are willing to pay attention to it. So, lecture over. But the reason I mention all that stuff about sentiment is it feeds directly into Elliott Wave theory. If you've read the Frost and Pletcher manual, then you will know on the sentiment about wave personality, market sentiment is a major factor in determining whether we're in a wave 2 correction or a wave 4 correction. Right. I spoke about the surprising disappointment recently to my patrons for a wave 4. I loaded up some charts for that. Which fits in with my longer term analysis, but essentially the sentiment in the market is going to be acting a certain way or going to be in a certain state depending on whether we're in a wave 2 or a wave 4 pullback. Okay, so it all feeds into one another is my point. Now let's bring up these lows then, and I won't keep flogging a dead horse. We can see here, I've just focused on purely the move up from this cycle, from the bottom of 2022. We can see these yellow lines represent the most extreme readings on the Fear and Greed Index based purely on fear, the lowest readings, projected then onto the chart. And as we can see very accurately, the extreme fear reading, most often than not, calls the low. Right? Clearly. Here we are back at extreme fear again. Here we are likely at the lows. We've actually got some bullish divergence. We're improving market sentiment, okay, while Bitcoin made lower lows. I'm not sure if that's a thing, I just thought I'd include it for a laugh. But either way, it still stands, right? We've got global liquidity pointing up for an 80 to 90 day period. We've got M2 money supply pointing up for a 70 odd day period. We've got Fear and Greed Index at lows, and we've reached oversold conditions on the RSI. Right? We have every reason to believe that this is when, as everyone's gotten fearful, this is when we need to be greedy. Okay? Now, worst case scenario, you're wrong. the market tops and we're into a new bear market. That can happen, all right? And this is where the trading element comes in about managing risk. The 10%, excuse me, keeping that risk factor of the whole portfolio to 10% or 20% or whatever it is that is your risk tolerance, but you manage your risk, you manage your stops. In case all of this is wrong, you're out, you're liquid, you're ready to benefit once it's all over. Okay, so there you go, guys. We've covered fear and greed, we've covered global net liquidity, we've covered M2. So now let's come into the more classical analysis and then the Elliott Wave analysis. Okay, a quick note on the Bitcoin primer, which you can find on my YouTube channel. If you haven't watched it yet, and you're new to Bitcoin, you should probably go and watch that first. We can talk forever about how the cyclicality of markets is influenced by money supply, about business cycles, debt cycles, so on and so forth. What that video focuses on is the pure price history of Bitcoin. We're not trying to explain the why, we're just observing the what and the how. Okay, so that video shows you the 4-year cycle in Bitcoin, how accurate it's historically been, and also the halving data as well, which has also been quite accurate as well. People might poo-poo it, but we're talking about observing the asset and its behaviour in that video, and you should go and watch that as I lay out the finish line expected for this bull market in terms of time frame. Okay, I've also put out on my Patreon, in a Patreon only video, the price targets for this cycle as well. Alright, and I still stand by those figures as being reasonable. And have to forgive me, you might have noticed I'm struggling a little bit with my voice during this video. Nasty cold at the moment, and it's giving me a bit of a cough. So let's break down now a few other things I want to cover. Okay, so now RSI and exponential moving averages on the daily time frame. So we know that larger wave degree corrections on the daily time frame tend to revisit the 250-day exponential moving average and sometimes break it, as it did here and it did here. We are back at the 250 now within this upward trend of higher highs and higher lows. We came down to the oversold conditions on the RSI, and you know, we all know that oversold conditions on the RSI are synonymous with finding market lows, right? We might sometimes get bullish divergence building up across several lows, just like we did here. We had lower lows in Bitcoin, we had higher lows in the RSI. We have the same bullish divergence building up currently. So for example, we have lower lows in Bitcoin pricing on the closing basis, and we have higher lows on the daily time frame on the RSI. So we have a little bit of bullish divergence down here. So we can assume that we've come back to another larger wave degree correction within this upward trend of higher highs and higher lows, and it is still an upward trend. The bull market trend, from a structural point of view, does not break unless price goes below $50,000. That's a long way away from here still. So we may still come down lower into further support, and if the bears get more loud and more bearish, right, and give us even stronger signals while still in an upward trend and all this other data is still intact, we should be getting more greedy at that point. But we'll keep our ears open for those kinds of people, just as we should keep our ears open for the right kind of people as and when we come to a new all-time high. Okay, so now that's enough classical analysis. We've gone on and on and on today. Thank you for your patience. Hope it's been valuable to you. And now let's move on and do some short-term Elliott Wave discussion about what we can see in the price action here. Right, so now it's time for some Elliott Wave finally. Two basic counts, bullish counts, and then we'll talk about bearish ones later. We have a wave 3 extension and a wave 5 extension, and they look like this in simple terms. So 1, 2, 3 and 4, and now we're in the fifth wave. We're getting a 1 and a 2 likely done or close to being done, 3, 4 and 5 to come in the fifth and final wave. The reason we need this fifth wave to complete higher is if we bring up the long-term count, we're saying primary 1 was the top of 2021 cycle. This is primary 2, this is all primary 3. We need 1, 2, 3, 4, 5 at intermediate degree to finish high enough so that the wave 4 corrects, it does not transgress into the 2021 peak of the primary wave 1 high. That's a strong Elliott Wave rule. The next idea is that we've had 1, 2, 1, 2, 1, 2. This is insanely bullish, right? But it's not impossible. So I would argue if QT disappears completely, Fed balance sheet runoff stops completely, QE starts, rates get cut, and it's money print to go moment, this is likely the correct one if all those conditions come about, right? Because then it's just off to the moon. But we don't know if that's going to happen. So the primary is an extended fifth, and we've done the 1 and the 2 of that extended fifth so far. So now we're going to come into the short time frame and focus that down with our count here. Come down to the 8 hour, and we're going to zoom in on this shorter time frame here. Okay, so here we are on the short time frame. We're using the wave 3 extension count on the smaller time frame here, but don't worry about what that means on the longer term. You just change this minute 1-2 into a minor 1-2 if you're using the extended fifth. It's the exact same idea. This is a 1 into a 2. Sentiment around these lows matches what we'd expect for a wave 2. Everyone's just very, very bearish down here. So on that note, this is how I've counted it up. It's a very tricky count, the correction is. So I see this as an expanding leading diagonal into an A. 1, 2, 3, 4, 5. We then have a sideways combination, W, X, Y. A flat here in the B of the Y. I can't really decipher what this is. It's just a mess. But either way, I've had to call it a sideways combination. I can't call it a zigzag, as the wave C wouldn't have come back above where the wave A completed. And I can't really pick out anything else in it either, so it's just a mess. From there, we come down in 5 waves, clear impulse into the C for our W. So we've gone, if I show you the moves with the polyline, to try and keep it simple, A, B, C, diag, correctly structure, impulse into our W. From there, we have a brief zigzag into the X wave, and then we have another zigzag down into the Y. So a brief Y, brief X, long drawn out W, and this puts the market low in place here, and now we will move off and higher to new all-time highs, back testing price support for resistance, or eventually breaking through that resistance to test for support. But the alternative is this little count here, which is an extra Y wave. So this goes A, B, C, W, X, Y again, and we move this over to here, and we move this over to here. That's if we make new lows. Alright, so we have a multi-zigzag within a larger multiple zigzag if we come lower. So now let's add in a little bit of detail about how we could be moving through this bullishly. We're going to change this to orange to accommodate the fact that it's a secondary idea. How can we come off of this low bullishly? Well, first idea I want to discuss is the possibility that we're building a diagonal. Okay, so I don't know if that wave is complete yet. We will have to take our time and see. But we're going to be doing something like this, perhaps. So I will label this a zigzag of sorts, whether it's an ABC or whether it's a WXY. We come into a 1 here, and then a 2, and then a 3, and then a 4 and a 5, and we get a diagonal structure, then a big breakdown back towards the lows. A sweep of the lows probably with a leading diag, because it tends to be quite a bearish structure. We'd be coming off of here, I think, in micro. Not entirely sure, but we'll just guess. And we're not even sure that 3 is done yet. This could be A, B, C into the 3, right? So it could be going higher, significantly higher. We'll have to wait and see. Okay, I'm just going to save that as diag. Like I said, impossible to predict exactly where it's going to go. Like I said, the 3 could come higher before we find the 4, before we find the 5. This could be another ABC structure. It's going to clear up over time. The alternative idea is that it's just an extension. So it's 1 into 2, 3, 4, 5. And then it's 1 into 2, 3, 4, 5. Like so. And now it's going to be 1 into 2 again. 1 into 2, 3, 4, 5. And we're just going to, oops, too many numbers. I'm having to talk a bit more softly now because my voice is right on the verge of disappearing again. I almost lost it completely a couple of days ago. Been under the weather lately. And we're going to save this as an extension, and we're going to put in an invalidation point here for that wave degree. and I don't think it would be feasible to consider anything below that level, to be honest, for the moment. So come back below here, it's invalidated, 81138 that's supposed to read. Like so, and we'll save this as an extension count. Short time frame. So just to quickly sum up the main bullish count at the moment, we have likely come into a wave 2 low. If we haven't, we have another zigzag move down into the Y, bringing us into major support, which is all these prior highs back here around 70k level, and completing another zigzag, and we simply move the Y and the 2 over to here. Okay, and we come down a bit deeper, and we look for the same conditions that we've been comparing with all the sentiment and otherwise to reoccur down here. Otherwise, we've bottomed already and we're going to work our way up. The two ways I can see us doing that is either we're building a diagonal, okay, 1 2 3 4 5, where each a contracting diagonal where each wave is smaller than the prior until we complete, maybe back at resistance. This, in theory, if it is a diagonal, will result in quite a deep correction before then retesting and moving higher, as wave 2 breakdowns should, once again, this is a wave 2, but this would be another wave 2, and the sentiment should be worse at the bottom of that subsequent wave 2 than it was even at the prior low, right? So the bears should be even more bearish if this breaks down, because they're probably thinking, oh, back test to the head and shoulders neckline, oh, that looks really bad, we're rejected, falling for all the typical traps. So we'll wait and see if that kind of sentiment materializes. But it's also possible, of course, that we're moving lower, as I just discussed, in another zigzag. Next idea is much more bullish, which is we've had a 1 and 2, 1 and 2, and now we're working on another 2. Okay, this invalidates at 81138, so if we move back below that, we're likely zigzagging down. If we continue to expand and explode out of here, we've done 1 2 1 2 1 2, and then we start to get the freeze, 3 4 3 4 3 4, and then I think we're well on our way at that point. But I don't know whether that's going to have to result in a wave 1 extension at a smaller degree, come back at a 2 again. We'll have to see how it unfolds over time. Okay, and that's the bullish count. This shorter term idea fits into both of the longer term bullish counts, whether it's an extended 3 or an extended 5th. So now let's wrap up by talking about the bearish count, shall we? So we're going to have to come out to the day time frame again, and we'll talk about the bearish counts. So the elephant in the room, ever since everybody started, shitting the bed, was the idea that the market's already topped, Bitcoin's in a new bear market, it's the end of the world. And this is what we'd be looking at. So the first major test in the breakdown of this upward trend, which doesn't happen until we get through $50,000, but the first major test for support would be at 71,754, right? It's all this here. Bears have got to avoid finding buyers in amongst all of this demand down here. Right, that's if we haven't already bottomed, we come into all of this. So this is first major challenge if we are in a much more bearish camp. If all of that fails, right, we break the trend of higher highs and higher lows if we go through 49577. I've written here basically bullish trend, bull market in brackets, intact until 50k. Break through that, bull market officially dead. Next major support is around the 61.8% log factor golden zone retracement at 31035. Okay, likely coming all the way back to 30 grand if we break through these levels. Okay, but we could stop at any time. If this is a 1 and a 2 at a larger degree, which is what it would look like, so let's show us what the count would be. 1 2 3 4 5 complete. 2 could come and stop as early as the 70,000 level, or in amongst all this noise. It could stop before the invalidation of a larger bullish trend, even if it's a small enough wave degree, right? It could be a minor or intermediate wave degree. It would break the 4-year cycle, I think, at that point. But it could still finish above that bullish level, or it's going to be really nasty, really massive, and it's going to come down to 30 odd K. And that is the bearish count. Right, but to sum up quickly before I go, we are still in an upward trend of higher highs and higher lows. There are a lot of factors to point towards that trend continuing. There is no solid evidence that it is dead. Okay, so in the meantime, we'll wait and see what happens in the short-term price data. But as I stuck my neck out at the top of the video, I'll wrap up by saying the same. The bull market is quite literally, technically alive. You can't argue that. No matter how bearish you are, the trend is still intact, and you're not right from a technical point of view unless price comes below 50 grand. Okay, from a sentiment point of view, we've already looked at all of those things. From a macroeconomic point of view, we've looked at some of those things. I'm still bullish. I don't think the cycle's been easier to navigate because of the meme coin implosion, because of the restricted liquidity this cycle, and all the uncertainty around it, and the sheer influx of noobs. No offense using that term, we're all noobs at some point. Has fed certain factors, like if you've gambled away your money this cycle because you weren't in Bitcoin and you've thrown it onto useless memes, like people did with NFTs in the last cycle, the ICO craze in the cycle prior to that. You know, if you haven't seen any gains, and the restrictive economic macro environment in general, right, has just made it tougher to be in anything other in the crypto space, anything other than Bitcoin. And I think it's clearer than ever. We've seen evidence in prior cycles, but it's clearer than ever that Bitcoin has separated itself as an asset in this asset class, right? It is its own instrument now. So when we're talking about the Bitcoin bull market, we are talking about Bitcoin. We're no longer, I don't think we can synonymously just get away with saying crypto bull market, because it's simply not true for hundreds, thousands, maybe tens of thousands of crypto assets by now. It's just not true. Okay, so Bitcoin is in a bull market. That bull market is still intact. It doesn't technically break down unless we come back below 50k. Okay, and that itself is a long way away. And there's a lot of evidence to suggest that the Bitcoin bull market is still continuing. And on that note, I'm going to wrap things up. So thank you very much for putting up with me today. I know I've waffled on at length. And if you're new to the channel, you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you want to learn all this stuff for yourself, all this Elliott Wave stuff anyway, get access to a great Discord with loads of channels and loads of interesting contributors and members, as well as a load of other educational material and exclusive videos and live streams and the rest of it. Feel free to sign up to the Patreon with a link in the description box below. Take care of yourselves, guys. I'll be back with you as soon as I can. All the best. Bye bye.